So as earlier promised, I'm going to give you the second component of the second module, and you'll be so shocked how simple this thing is and how Mwangi uses these concepts to come to making whatever he does make. And remember again, if you have not watched this, go back and watch the previous one and understand why I'm doing this. I understand principles of doing things, and I am a good ambassador of doing the right thing. So I believe that people that paid um, money to his mentorship, they deserved to get content in totality. Now I'm going to give you the concept, but you will be the one to work on it and make it work for you. The previous video, I got a tweet about that. Somebody used those concepts and they were doing something good. I traded the same stuff yesterday and I shared the same on my X account. Now, this is gold 1 hour time frame. The thing that I'd like for you guys to get from what I'm going to disclose here today, of course, is that once you have gotten these concepts, especially the ICT traders, it's not about the concept, but it's about how to put them to work. ICT himself says they are disjointed. And Mwangi is a very good student of ICT, and he tries to disjoin the stuff so that you don't get it. But thank God, people like me, people like you are there, and we can dig into that stuff in a matter of days, and we get to put together what is it this guy was trying to do. So with us is a 1 hour gold chart. This is a live chart that is happening. And so we have a fair value gap. Are you able to see a fair value gap here? So it begins by identifying where the market starts from, the fair value gap. And if we have a fair value gap like this, what will you naturally expect price to want to do? You will naturally expect price to do one thing. You want it to consolidate from in that fair value gap, or move from that fair value gap and attack a high such as this high. Or if it's going to inverse this, then it's going to go for lows like this one and this one. So if you have a fair value gap like that, you are expecting that price can do one of these things. It can just decide to consolidate right here, or move from here and attack this high, or move from here and attack these lows, all based on the 2022 model where ICT talks about these things, and Mwangi took note of that. That price persists two things, either going for highs, lows, or imbalances. Now this model has in fact begun with price is at a fair value gap, so it is already balanced an inefficiency such as this fair value gap. So I want you to watch closely. We are going to mark the high, and then we are going to mark the low. So we have that high, and we have this low. So what is price doing? We're expecting it to run from here, and then everybody is going to look for opportunities to go where? Low, right? And then they will now have buy here, and expect that price will do something like this and get to that point. Unfortunately, you can see that was an attempt to go long, then a drop that eventually takes this loss before price began making another move, trying to go for the highs. So what does this guy do? He capitalizes on what we refer to as the failure swings, a failure for price to leave the fair value gap and to go and attack the high range, or another range, or another set of liquidity, but constructed from the previous concept. I want you to look at the candles carefully. Look. What do you see? What do you see there? You see what? You see CRT what? CRT high, CRT low, right? And then the candle that is confirming CRT high and CRT low is this candle, and the open of the next candle, which is this, which begins from here. And now we're going to dig into lower time frames to confirm our move lower. He has constructed much of his concept based on that CRT stuff that guy teaches. And in the next module, which will be on 14th, I'm going to give you the exact stuff within CRT that makes that course to be expensive. So what do we have? We have the open of this candle, and then these are now the highs taken, and the formation of CRT confirmed by closure of the candle body below here. And then we have this kind of displacement. I want you to look at the displacement that happens. Opens here, displaces and closes well below the low of that candle. Are you seeing this candle here? This one, there. So your area of interest becomes this zone. And look at how price behaved. Open, ran to this, and if you are too fearful, market structure shift back to this area, which now becomes to me an order block. Why? Propulsion, in fact, because if you extend this one right to the right, consider how price has respected that, and then there is a drop that heads straight away to this relative equal loss. So what is the concept, guys? The concept is find a fair value gap and find a reason for that fair value gap to get disrespected, such as a place like here. So we have this fair value gap here. Naturally, price should do what? Drop in here, then do what? Drop higher and maybe go up to all the way up there. But if you look at this, it seems to me that it somehow worked, because if I had this price open here, and I see this long wick and it took out this high, looks like it worked. But you still could work your way below to trade towards the lower opportunities. So what do? You have that fair value gap, and look, open, running, creating what? Creating a CRT formation. You see that? So takes that high, closes below, and then that range of a lot of displacement is happening right there. So when you have this displacement and closing right below the low of this candle, then your area of entry becomes that area. It's much more sweet whenever it have something like a wick. That wick is exactly where he capitalizes on to begin looking for lower time frame opportunities. But here you can see already high taken, CRT again, and we have this low taken, and in this place a fair value gap has formed, a drop in and a drop below. I want you to go, guys, and take your time, dig into price, look at where we have swings that fail. We have a fair value gap created here, right here, a fair value gap, a rally higher, CRT above the fair value gap, open, run into this, and look at your area of liquidity where it draws to. And then we have another area where do we have? We have a fair value gap here. What happens? A rally from the fair value gap runs higher, CRT forms, close below this, high probability entry, lower position, going into where? Returning into this fair value gap. So this one is constructed based on external to internal range liquidity. And for those guys that paid that mentorship, here's your stuff. I'm bringing back your money back to you. The third module I'll also be able to present to you. Those concepts are very, very simple. They shouldn't be equivalent to that much. However, I know that you need to put in work to also get this stuff moving and working for you. Works on all markets, works on all charts. Look into the charts, back test this stuff, and get it working for you. I wish you a great evening. Have a great time until 14th of this month, when I give you the stuff that is hidden within CRT, which makes that course become expensive. Maybe just one last thing: if you're going to take someone's money, if you're going to take promise them something, make sure you deliver, make sure you do the right thing. And I'm not going to pull executions at this. Mine is to just reveal these concepts to the group, especially the deserving group that already paid for this. Until next time, stay safe.